Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast with the agricultural economist Gary Schitnky from the University of Illinois Extension and Donna Hughes from Stonex on the show about cattle markets for right now. Here's Gary Schitnky from the University of Illinois. We were talking about the cash land value and trade in the Midwest and Illinois with Gary Schitnky from the University of Illinois Extension in Urbana-Champaign. Hi, Gary. How are you today? Let's discuss about the commodities markets, especially in a trade deficit. Could you tell us about that with our audience?
Yeah, good morning, Cesar. And yeah, I'm doing fine today. It's a little bit chilly in January in Champaign, Urbana. Um, so we've seen some rising prices in the commodity market here recently, but that was mainly because of USDA or WASD or the Office of Chief Economist lowering their expectation of yield for last year, coming up with the final yield that was lower, which then lowered supply and caused a bit of a pop in prices.
Oh,
Not too high. Um,
oh, mm.
so there's where we're at, and now we're turning our attention to other things, and one of those is trade, and obviously for both corn and soybeans. Um, Exports of commodities are good. We are important. We have about 40% of the soybeans that are exported and 10 to 15% of the corn. So, in a lot of those, particularly soybeans go to China, and corn primarily goes to Mexico and Japan, but China is also important in those in that trade as well. So, as we look at um, Trump and their trade policies, tariffs, um, imposition of tariffs would likely result in tariffs by other countries on our goods, and that could include soybeans and corn. We'll see where all that goes. There's a lot of speculation that that's uh, a negotiating part on Trump. We'll see, and we'll see where all that goes. So um, that is a concern that's going on right now.
How is it for right now on the board? And do you have any concerns about ag trade?
Uh, so yeah, right now, as we look today, we are trading corn at and this I'm looking particularly at the December uh, contract. We are looking at the December 2025 contract being at 460, which would be roughly a cash price of about 430. So as we're moving overall, we do have concerns that price can be lower, could go lower. And that could go lower because of either we have very good yields in U.S. or even in Brazil, which is beginning to go at earnest at their corn crop, the safrinha crop. So we'll see where all of that goes, and obviously trade and demand will also play a pretty key role. Um, Soybeans are November contract is at 1055, which would make a fall deliveries low tens, 10, 10, 10, 20. again, you have the same concerns, and they're probably a bit larger for soybeans because more of our crop is exported. So we'll see where all of that goes.
What is the farmer's respective in central Illinois? Probably you talk to.
So I think we still see now farmers in an overall guarded mood. I mean, guarded would probably be a good word for it. We've seen some pretty good years income wise in the past. We aren't likely to see as good a year in 2024 and 2025. However, the recent passage of the economic assistance takes the sting off 2024, and we're waiting to see what 2025 looks like. So it's a guarded time, and farmers are having to deal with lower prices and lower incomes.
How is the cash rent land value in Illinois?
So cash rents in Illinois went up tremendously in the past several years. We saw overall roughly a $30 to $40 increase between 2020 and 2023. And we might have saw leveling off in 2024, and we might see a slight decline in 2025. So those cash rents have went up considerably all across Illinois. So those have went up, and cash rent levels will vary based on productivity. Given where we're at economically, we need to see those cash rents come down and go back to the 2020 levels. That's not likely to happen, but that is sort of where economics are suggesting that they should be. Again, we've seen costs go up, and in the 2020 period, so did prices, and now prices have come down, but costs have not. So we're in the cost price squeeze here, and we're looking at lower incomes.
What is the price trends for right now? Could you tell us the numbers?
Yeah, so for and I'm going to just go over Illinois in general. So there's a great variation in Illinois across the cross cro, cro, across the state, but we're looking at let me get that number up here. I'm looking for my
Mhm.
there it is. So this, let me change my mind a little bit. I'm going to give you Central Illinois prices. So just to give you a feel, in 2020, we saw Central Illinois prices at $262 per acre. Those increased up to $284 per acre. And so we saw quite a price increase, and that $284 per acre is a excuse me. I'm still giving that's central. Let me give you central numbers. Central Illinois in 2025 was $280 per acre. That went up actually to $360 per acre in 2024. So we saw a sizable increase of that. And now we need to see those rents come down again.
Gary, how much of time to get past the farm bill?
Yeah, so we've seen a farm bill extension for the last 2 years. So we're still working under the 2018 Farm Bill. And this year, farmers will have the same ARC and PLC choices that they had last year. So by March 15th, they will be making the same decisions that they have before in past years. So PLC and ARC. This year, there's a chance that Farm Bill will get passed. We'll see whether that does happen or not. I'm not all that hopeful that it gets passed this year, and I would be looking for an extension. Again, you can put your your beliefs on that, but I'm sort of the opinion that it won't get passed this year, and we'll be looking at a extension of this farm bill going into 2026 year as well.
Are you watching about the bill for crop insurance and what needs some key issues you have?
Yeah, so this year, crop insurance, we will have the same choices that we did last year. And I would still suggest that most farmers should stick at a RP coverage level, at a high coverage level. They may also want to look at enhanced coverage option. And the new thing about enhanced coverage option this year is that they've increased the premium support of it. So the premium support will be higher, and that will lower the cost of that product to the farmer. Now, that's not a slam dunk. Some farmers may choose to do it and others may not. But I would suggest taking a look at it because it will have a lower price this year.
Gary, how much of time to get that? Do you have any final thoughts on ARC and PLC?
Yeah, so this year we are in the process of really looking through that ARC and PLC decision. For soybeans, the choice is clear. It's ARC. For wheat, I would be leaning towards PLC. And for corn, it's sort of a toss-up, but I would probably be leaning towards ARC for corn. While the effective reference price has gone up a lot, so has the benchmark price. So probably looking at ARC, but I could see farmers making a decision to also go for PLC. So we'll wait and see where all that turns out to be.
Where people can find your information.
So my information is available on FarmDoc. So take a look at it there, FarmDoc. Go to FarmDoc Daily, and every Tuesday you'll see an article related to economics and that I'm a part of. And then there's um, a section or an article pretty much every working day. So go to FarmDoc Daily.
Thanks, Gary. I enjoyed our conversation for today.
Thanks, Cesar, for having me.
This is Gary Schitnky from the University of Illinois Extension in Urbana-Champaign on back roads of Illinois. This is your commodity markets for this afternoon, sponsored by Kyle Bumstead. He's your commodity broker from Allendale Incorporated. Corn futures is down for today at 3 to 6 cents. Soybean futures is down at 9 to 4 cents. Wheat futures is down at 3 to 5 cents. Let's take a look for the livestock markets. Cattle is up at 5 to 9 cents. Feeder cattle is down at 3 to 6 cents. And lean hogs is down at 3 to 4 cents. This been your commodity prices for this afternoon. We were talking about the commodities markets, especially in the grains markets for right now. We were talking about that with Donna Hughes from Stonex. Hey, Donna, how are you doing? Let's kicking things off about the grains markets for right now. What is the fundamental to the grains?
Well, right now with corn and soybeans, we are coming off the latest USDA WASDE data, which has given the markets a little bit of direction for corn. We're going more towards the upside than what we thought we'd be doing, just because of the numbers that came out with the WASDE that showed tightening of stocks. And soybeans, we were dropping lower due to that WASDE data as well. That's up until we started getting some weather updates from South America that was giving us indication that there was some dryness and heat that was affecting some of these production areas in Argentina and Brazil. And with that, especially with some of the areas that are very, very dry, limited rainfall is reported in those areas, not giving a lot of relief. And then some of the areas that have been dry, they're getting maybe too much rainfall, and that's hampering soybean harvest. And that's going to affect especially the second crop safrinha corn. And anyway, we'll have to see. We'll see how the weather progresses as we go along.
How is the March corn on the board?
The March corn contract today made a new high for the move, trying to reach up toward that $5 area. I think we got up to $4.91 during today's session, but we backed off a bit. Looked like we may have been trying to be in a reversal pattern, but that did not develop. And so we're kind of sitting at mid-range for today's close, and we'll have to see how we progress as we get on through the week. We should have export sales coming out on Friday due to the holiday and inauguration on Monday. So we've got a couple of sessions that will be trading before those export sales come out. Export sales for corn have been very, very good. That's helped to support this market. And with soybeans, we've seen some of those export numbers backing off. And, all of this as we are anticipating more product coming into the pipeline from South American harvest.
Of cattle.
Yes, with the cattle markets, we've seen the cash cattle markets topping out just over that $2 level over the last couple of days, and futures, near-term live cattle futures hit there as well in today's session, just moving a bit over the $2 level. We saw a lot of fun buying, or what we think is fun buying, with today's action. Feeder cattle had the largest gains. Of course, that market, with liquidity, when we have a lot of action in the feeder cattle market, it seems to be volatile due to the liquidity. But with all of it, with the live cattle, producers that I've talked to, they have cautious optimism. Remembering back on what happened to this market last time we were up near this $2 level, we did see prices back off. Product values have seemed to be backing down a little bit, and packers have been dealing with negative margins for, a good while. And so, a lot of moving parts within the cattle market. The funds are extremely long the market. Speculators are extremely long the market. And if, they decide, if either of those parties decide it's time to go to the sidelines, we could see, some big downside to the market as they liquidate.
Let's see what happens to the cattle markets for right now. Could you tell us about that with the cattle markets?
Right now, we're getting a lot of frigid temperatures and snow conditions and ice over many parts of the U.S. And so when we see something like that, especially in these, bigger areas, bigger cattle producing areas, it does tend to back up cattle, and that would support prices. So we're keeping an eye on that. But aside from that, it's obviously been a huge run up to these levels. And if we remember back last year, we had some good upside to the market as well. And by the time August came, feeders in particular had dropped back, $30 or more in some of these contracts. So I think with, producers that we talk to, again, cautious optimism, but we're telling, producers to, make sure that you're staying aware of what's going on with the markets, and, take advantage of, hedging, however you would like to do that, either with futures or put options. Or we also have LRP insurance that's available to producers that can also help with risk management.
You mentioned that we see liquidation, but what about the cattle on the feed for January 31st from the USDA?
Yep, we are going to be getting a new cattle on feed report. This will come out on Friday, and we should be getting some of those expectations. A couple of the analytical firms have already released their estimates, but that report will be released on Friday at 2 p.m. Central Time. And so, we'll see how the market trades those numbers. Sometimes, even if it's something that is off from expectations, sometimes it'll be thought of as being quote unquote built into the price, current price levels. But again, we'll have to wait until Friday at 2 p.m. Central Time to see what USDA gives us as far as these new cattle on feed numbers.
Do you have any final thoughts on this cattle markets?
I would just, encourage producers that if you have break evens to keep in mind, make sure that you've got those protected in some way, and know what your choices are for risk management, and just keep aware and keep connected with your partners that are in it with you.
Thanks, Donna. I enjoyed our conversation.
Thanks.
Thanks to Gary Schitnky from the University of Illinois Extension and Donna Hughes from Stonex. You can listen to our show on YouTube and wherever you get your podcast. This has been the Markets Club podcast. I am Cesar Delgado. You have a great day.